Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing returns in the halving year. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. The halving year is always an interesting year for Bitcoin. There does tend to be more volatility in the halving year than in the pre-halving year. And I just want to go through historically what has happened, keeping in mind that what has historically happened does not have to be what plays out this time, but it is something that I just wanted to show. The first thing we can look at are the prior three halving years, so 2012, 2016, and 2020. And what you'll notice is that in all prior halving years, there was a dip sometime within the first 3 months. Now, the dip that occurred in 2020 was obviously the most aggressive, and I know that it shows it only going down here to about 30% down, but we actually know it went much further than that when you include the wicks, okay? But from the yearly open anyways. But in all three cases, you can see that after about 100 days, okay, so after about 3 months, we were essentially still at the yearly open. So go look at what Bitcoin's yearly open is right now. So it's around 42K, around 42K. So what would be interesting is that what this chart here is suggesting is that on average, right, if you look at all prior halving years, on average, after about 3 months, the price of Bitcoin is still at the yearly open, right? But also what you'll notice, we talked about this going into the halving year, is that you get a dip sometime in the first few months of the halving year. And in all three cases, it went down at least 15% or so from the yearly open, right? So if we look closer, you can see that in 2016, we went all the way down to about 16% down off the yearly open. Same thing in 2012, maybe about 17% down. 2020, it went about 30% down. It actually went further than that if you include the wicks. So to give you an idea of what that would mean, remember the yearly open is around 42.3K. So 42.3K, if we were to take a price range here, so a 15% drop gets you to around the 36K level. The reason why 36K is interesting is because that's right around where the bull market support band is, right? So that would be about a 15% drop from the yearly open. 2020, we know, let me look at it on a smaller time scale here so we can look a little bit closer. So the yearly open, remember, was around 42.3. So a 15% drop gets you basically to that bull market support band, right? That's where it would put it. A 30% drop, which is what happened in 2020, not including the wick, would actually get you back down to around 29K, which coincidentally is actually right around where that 100-week SMA is. Right, that 100-week moving average is right around that level. And the reason we've sort of pointed both of those potential targets out is that at least in the last couple of cycles, not only have we gone back and tested the 100-week SMA around January, February of the halving year, you can see that we also tested the 100-week SMA, right? So here they corresponded to the same value. Here they didn't, but we ended up testing both of them, right? The bull market support band and the 100-week SMA. Over here in 2012, you can see that we tested the bull market support band in February, but we had just tested the 100-week in December, right? So it was slightly accelerated, tested the 100-week in December, and then tested the bull market support band in Q1. But in all prior cases, right, sometime, around this time of the cycle, Bitcoin was testing, either the bull market support band or the 100-week moving average. Now, there's no guarantee that this happens this time, right? I have to be clear. These sorts of I don't really want to call them predictions because I'm not really trying to predict here. I'm just saying, hey, this is what's historically happened. But these sort of forecasts, they sometimes pan out and then sometimes they don't, right? So you're saying could go up, down, or sideways. Yes. Basically, that's what I'm saying. The point is that there is a risk in the market that around this time of the cycle, we get we get these dips, right? And we're actually in one right now. I mean, if you look at where we are right now, so this is 2012, 2016, 2020. Here's 2024, right? I mean, you can see that 2024, at least at the current time, is most closely following what happened in 2016, right? So look at this. At the current time, it looks the closest to 2016 than the others. And structurally, there's a lot of other similarities, right, as well. And so when you're if you're curious about what I'm talking about, it's basically like in terms of looking at like this structure here, finally breaking out of it, right? So you have these highs here, you finally break out, and then you back test. So then again, you sort of you come up to a level, and then you eventually break out, and then you sort of back test the breakout point. It looks more similar to that, right? Where you have these levels that you finally break out of. And so then the question, right, is will it eventually backtest this? There's we've talked about the halving actually before as well, on more than one occasion. Here was a video. This is kind of an interesting video that I did back in 2022. This was when Bitcoin was like 30K, and we basically suggested, hey, it's probably going to go down. Go to the regression band, spend some time down here, and then eventually break out to the upside. Now, it's hard to see exactly what price that is, but there's another video that I put out, and this is just sort of an interesting video that I got the path completely wrong on, right? Completely wrong on. But this video was put out 3 years ago. So this video was put out right around the third halving. And the idea was when I put this video out, I made it Bitcoin fair valuation at the next halving in 2024. But you can see that I put this video out at the 2020 halving. And I said that in the fourth halving, the fair value, right, the quote unquote fair value will be 40 to 50K. Which again, I mean, at the time it seemed absurd. And you can see that the path I drew out did not play out at all, right? I mean, we went up, but this major peak over here actually got shifted here, right? It was actually here. And we also did not go as high. But regardless of that, the funny thing is that we're still right around that level, right? Between 40 to 50K at the fourth halving, okay? So going back to this chart, right now we are at 41.5K. History shows that basically through the first 3 to 4 months of the halving year, let me just take an average. Let's take the average of all election years, right? So that's the halving year. And then we will just show that one. And then the current year. So history shows that on average, after 4 months, Bitcoin's price is still where it was at the yearly open in the halving year, after the first 4 months. So if that is true, right, if 4 months from now, or let's say 3 months from now, because we're already mostly through January, let's say if 3 months from now, Bitcoin is still between, let's say 3 months from now, Bitcoin is at its yearly open. Its yearly open is, of course, 42.3K. 42.3K puts Bitcoin still between 40 to 50K, meaning this prediction of 40 to 50K by the fourth halving that was made 4 years ago will actually be true. Now, there are caveats to all this. By the way, one of the interesting things that I like to tie this in because I think it's actually really, really important, the Ether Bitcoin pair. Remember what we said in the last video? We said that the next window for Ether Bitcoin to break down is likely no sooner than March, right? No sooner than March. Now, this is where, if it breaks down in February, that would certainly lead to a nice price. Look, guys, my view is that it breaks down. I don't really care when it does it, right? I mean, if it does it tomorrow, then great, that's fine with me. But what I am saying is that oftentimes when you get these breaks up by Ether Bitcoin, it takes at least a couple of months for it to come back down, right? And break the low, right? At least a couple of months. And here it took, you can see that it came back down in May and then again in June. Here it came back down in October. But what's interesting, and again, we've sort of looked at this through the lens of rate cuts, right? And noting that Ether Bitcoin broke down here during rate cuts. It didn't know we weren't getting rate cuts over here, but we were right here. And so there's another way to think about this, not through the lens of rate cuts, but just through the lens of seasonality, right? When could Bitcoin make another move if it's going to, right? Well, history shows that it wouldn't occur until sometime out, in April or May. I'm not saying that it can't go up. I mean, even in the halving year, even in the last halving year, Bitcoin went up. But the next more durable move didn't occur until sometime, around April or May. So it's possible that corresponds to Ether breaking down against Bitcoin, right? A few months from now. Remember, it's not always Bitcoin rallies that breaks Ether down, but a lot of times it is, right? It's a Bitcoin rally that breaks the Ether Bitcoin pair down. There are times where Ether Bitcoin goes down while Bitcoin is going down. Here's a great example of Ether Bitcoin capitulating during a time where Bitcoin was going down. But the point is that, both of these prior breakdowns here was when Bitcoin was in fact going up. This one here was actually, when it actually broke down in July, it was on a slightly lower high, but the lower high was compared to the higher high was just occurred, just before it. So you have to think that if money does flow away from ETH and back to Bitcoin sometime in April or May, that could cause Ether to break down against Bitcoin. And again, on average, that's where Bitcoin would start to potentially come out of a dip. Now, I know what a lot of people are thinking, right? I mean, this is great and all, but will it continue to follow that for the entire year? I don't know. I mean, I don't. I think there's, even if you look at 2020, I mean, we had a great start to the year, and then what happened was we had a black swan event, and then Bitcoin just absolutely crashed, and it retested these prior lows, more or less. We also had a period over here where we retested the lows. And so, I look at this chart and I say, well, is there going to be some type of larger event like that where you go back down and you sort of retest those lows? And, there's certainly part of me that thinks that it's possible. I mean, if it can happen last cycle, and if it can happen the cycle before that, then why can't it happen this cycle? Maybe we get a flash crash or something that takes us back down, makes everyone think that it's truly over, and then it goes back up. That's what happened last cycle. But I can't promise that will happen, right? I can't. It could happen. I mean, we could also come back down here and then go back up. If you think about having your ROI, one of the reasons that I think that it typically has behavior like this is because by the time you get closer and closer to the election, the politicians are going to want some type of looser monetary policy so that you're not going into the election with rising delinquencies in small businesses, right? I mean, if small business delinquencies continue to go up, which is what's going on right now, you're not going to want to go into an election with that, right? And so the way to sort of alleviate that is to go back to lower interest rates, to go back to quantitative easing. and again, if you look at market expectations, they're constantly changing. But what's funny is that now the market is not thinking the first rate cut occurs until May, right? Not until May, which is funny because May is right around the time that this occurs, right? Where you can see that all prior 3 cycles went up. And also, May would be when the next, if it hasn't broken down in March, maybe Ether Bitcoin would then come back down to these lows by May, right? And then break down. So, I think when I think about where we are in the cycle, it certainly seems like we are on that same fair value that we outlined about 4 years ago and that we talked about in this video. But there is this looming thing of, well, what's going to make the Fed go back to looser monetary policy, right? In 2020, it took a pretty big event to go back to much lower rates, right? And to really turn the money printer back on. Over here in 2015, 2016, we did not have a recession, but we did have a recession scare, right? We came close to a recession in 2015 and 2016. And if you look at where Bitcoin retested the bull market support band and the 100-week moving average, that was in February of 2016. Well, remember, in February of 2016, if I show you what was going on, that was when basically the S&P had this drop here late 2015, but then it had another drop in 2016, right? And you can see that when it had this drop, that is when Bitcoin had this drop here back to the 100-week moving average and the bull market support band. And then last cycle, when we had a hard landing, right? You guys know what happened with the hard landing, right? The S&P dropped a lot, right? I mean, it fell off a cliff. And when that happened, Bitcoin, yes, it went back to the bull market support band, but it also went to the 100-week and it went a lot lower, and it more or less put in a macro higher low. And so there's a lot of volatility in the halving year, right? But that's not always just to the upside. It can also be to the downside as well. Oftentimes, the downside volatility is what causes looser monetary policy to come back into play, right? So you get some type of major risk-off event, and after that, and because of that risk-off event, the Fed pivots, and then sometime after they've pivoted enough, they've gone back to sufficiently looser monetary policy and QE, then you put in your macro higher low, whatever it's going to be. Over here, it was a double bottom, and then we went up. This double bottom occurred on the first drop by the S&P, right? I mean, if you guys remember what I was showing with the S&P, 2015, 2016, right? It had 2 drops, right? There's this first drop here in August, September. There's a second drop here in February, right? And in that second drop, it got back to the 100-week. The first drop, it put in the double bottom, okay? So halving years are always interesting in that regards because, the Fed's probably going to have more, they're probably going to feel more pressure to go back to looser rates sometime before the election. So that's where we more or less are right now, right? Bitcoin's between 40 to 50K, sort of still following this outline, although the peak occurred at a completely different time. It's still following this outline, but I do wonder if this is the next stop. Okay, the bull market support band, around 36K. Which, by the way, I mean, again, a 36K Bitcoin, while it might sound scary, it's only 15% below the yearly open. And remember, that's where basically all prior halving years have gone, at least, was 15% below the yearly open. So I think it's relevant to think that 36K could come into play. And it will be important to see what the reaction is at 36K. Because if the bulls do not come out to defend at 36K, then the next level that you're looking at is all the way back down here at 31K. Okay, so I'll say that again. If they can't defend at 36, then your next level of potential support is all the way down at 31. Now remember, last time we sliced through all that stuff and we went a lot lower. Time before that, we held it as support. So it really just depends on how the macro evolves. Is it continue to evolve very slowly? If it does continue to evolve very slowly, then Bitcoin's more likely to hold these things, one of these levels as support, right? Whether it be the bull market support band or whether it be the 100-week moving average. If the macro evolves more quickly and things deteriorate more quickly, then you could get something like this where you get a hard landing, and then we go back to looser monetary policy a lot more quicker. So again, it depends on how things play out. I think on the macro side, that dictates just how deep a drop you can get. Now, there's also the other view, which probably merits our attention as well, and that's the view that it doesn't break down at all beyond this level, right? I mean, there's some people out there that have views that say it won't break below 40K, right? I know some people are suggesting that, and I do think the longer you're in crypto, the more you recognize just how valid it is to listen to everyone's view, okay? Because if you think about it, at every turning point in the market, there's always a lot of people that it's easy to laugh at people that have a different view, right? But it's important to listen to what those people are saying because they represent a certain percentage of the population, right? If they think that, then there's probably a lot of other people that think that too. If someone thinks that this is going to be the high for a long time, because this is where, this was the 618 retracement that we talked about, 48K, 48.5K. This is where the spot ETF, was launched, and we know that when you launch these products, it can mark highs for a while, right? But there's also someone out there that thinks the opposite and thinks that, okay, fine, it's marked at least a local high, but we just have to cool off for a little bit, and then we'll go put in a higher high, right? So I think it's easy for no matter what camp you fall into to ignore the other view, but consider both views as useful views of the market, and just know that, yes, while you have your view, there's also a lot of people that have a different view. And consider that. And the reason I say consider that is because it's useful to hedge, right? It's always worthwhile to hedge in the market. And that means, if you have the view that this is the high for a long time, do know that even if we do come back into these levels, there could be a reaction where people, try to buy again and try to hold that as support, whether it be here or whether it be over here. But if Bitcoin, let's look at lower time frames, right? If you look at like a 4-hour time frame, you can see that 40K is a pretty important level, okay? So 40K, this is the level that I'm sure everyone's watching, right? So you can see that we got above 40K here, held as support here. We got close to testing it there, but not quite. And then we just tested it again. So we've talked about 36K, we talked about 30K, etc. But until 40K breaks, that still remains a question mark, right? Now, I would say if 40K breaks, we're likely going to go down to the mid 30s, right? In 36K around the bull market support band. If it takes another 4 weeks, then maybe it's only 38K or something. I don't know. But if 40K breaks, I think you likely, at the very least, you come back down and you test this level, right here, 38K. So I think that is a relevant area to say, all right, well, if 40K breaks, then 38K would be the next level, which is where the bull market support band will be in a few weeks, right? Let's say by sometime in February, around that 38K threshold. So it'll be interesting to see how the market reacts at that level. I am of the view that at some point, Ether will break down against Bitcoin. And normally that occurs, on some type of Bitcoin bounce. It kind of goes back to the dominance video that we did yesterday, right? Like dominance kind of sucks right now. It's below its bull market support band, but it's still trying to hold on, right? Just like it was holding on right here for a while before it went back up. So when I look at a chart like this, right, looking at the Bitcoin dominance chart, maybe it spends a few months or a few weeks, sort of below the bull market support band, but I can't help but think that at some point it's going to get another move up. And if and when it does, then, it could correspond to sometime out in a couple of months from now, right? A few months from now, where then Ether Bitcoin potentially finally breaks down. So certainly a lot to consider with this cycle. And how the halving stuff plays out. The things I want to remind people of are that, we do talk about the risk as much as we can. We talk about the downside risk. We talk about the upside risk. The downside being the bull market support band or the 100-week moving average in sort of a soft landing type environment. A hard landing scenario would take you down to to the prior lows, right? That's where a hard landing scenario would take you. And I do feel, I do feel like it's, it can be, the way that I talk about the market is like, it certainly could be thought of as too risk averse, right? And the reason why I say that, let me show you this view here. And this isn't a new view, right? I think everyone's aware of this view. And if you're not, then you just haven't been watching, a lot of these videos. But there's this idea, and again, it's a dubious idea, but it's the idea of in your bear market year, you go to one regression band, and then sometime later you go to the one below it, which can correspond to a higher price, right? Like this was this regression band, we had a higher price, but a lower regression band in the halving year. Same thing over here, right? You go down to one regression band, but eventually you test the one below it. And so that's what I would consider to be a hard landing, would be if Bitcoin were to go and test this regression band down here in some type of a macro double bottom or a higher low or something like that, right? Now, the reason why it's risky for me to talk about this stuff is because while I will always say that my strategy for crypto investing is to DCA according to the risk levels, that is what I do. That is what I've always done. That's what I plan to always do, right? I DCA according to the risk level. And if you're not familiar with what I'm talking about, it's this chart right here. This one. So when the risk is low, I DCA in. When the risk is high, I DCA out. That's what I do. Now, I sit on here, talk about all sorts of possibilities all the time, right? We talk about whether Bitcoin bounces and breaks Ether Bitcoin down. We talk about whether Bitcoin gets some type of scare, around the halving and leads to the Fed going back to QE and some type of macro retest. We talk about all sorts of things, right? But guess what? I don't trade those views, and I'm clear about that as frequently as I can be. I don't trade these short-term views. If the risk is low, I buy. If the risk is high, I start to sell. And if you think about it, it's not really the worst way to go about investing, because otherwise you just spend all your time, thinking about, well, what if this and what if that? What if you just say, you set an alert, if X, then Y, right? If risk is below this level, then I'll buy. If risk is above that level, then I sell. And then the rest of the time, I'm enjoying my life, right? I don't care about the other stuff. I'm just going to enjoy things and say, all right, well, Bitcoin risk right now, all right, yeah, it's at this level. If it goes down to this level, then I'll pick some up. If it goes up to this level, then yeah, I need to take some profits, right? That's how I navigate crypto. So I have to be clear about that, and maybe I can do a better job of communicating that. So when I say things like, hey, there is a risk that Bitcoin could go back down and test the integrity of these lows, it's not like, I mean, it's not like I'm sitting there with, with 100% cash waiting for some type of opportunity. Because the reality is that even if that does occur, even if we were to get some type of capitulation down to that level, the truth is that 99.9% of people would not buy it anyways because they'd be watching for it to go lower. So that's why I say you have to have a strategy and you just stick to it, right? You just stick to it no matter what happens. Okay? So, yes, there is a risk that Bitcoin could do what it's done previously, right? And put in some type of macro retest of the lows, right? There's a chance that it could do that. There's also a chance that it doesn't do that, right? It's possible. It's possible. So, again, I think it makes sense to be hedged either way, right? That way, if Bitcoin does continue to outperform, hey, you have some Bitcoin. But if we get some type of massive drop, then that's where you want to be. You want to make sure you have some money to buy the dip. Now, I know what you're thinking. You're probably thinking, well, isn't that the easy way out? Like to say, well, it could go up or it could go down. Well, see, here's the thing. What I have said for the last 2 years is that the way that I hedge, I don't really care how you hedge, but the way that I hedge is I just keep a Bitcoin heavy crypto portfolio, right? That's the way I hedge. Now, some people have hedged by keeping an Ether heavy portfolio or an altcoin heavy portfolio. But I hedge by just keeping my portfolio Bitcoin heavy. And the reason for that is because even in a scenario where you get a hard landing, I still think Bitcoin would eventually recover, right? Even in a hard landing scenario. Unfortunately, I can't say the same about every single altcoin. And why do you think we put out all these Bitcoin dominance videos, for the last 2 years? Do you think it's because I just think, hey, I just want to bore people to tears for an hour every few weeks? No, right? We talk about the Bitcoin dominance because of what I've said previously. If you think dominance is going to go higher over the longer term, which a lot of people have given me crap for that view, but it's been going up, I think back to the thousands of interactions I've had on Twitter, X, and on YouTube, and everywhere, where people laughed at this view of dominance going up, and my Bitcoin heavy portfolio. All these altcoins will outperform it. I look back and I say, well, those people can laugh all they want, but they were wrong. Dominance has gone up a lot, and I think it's going to keep going up. Now, I'll admit, I could be wrong about the and keep going up part. Oftentimes, dominance doesn't go that much higher in the halving year, and there's some case to be made that is the high on dominance. There's some case to be made that it could be. But I still think that until we get back to looser monetary policy, dominance is still going to be skewed to the upside. And as it turns out, looser monetary policy keeps getting delayed. It was potentially going to be a March rate cut. Now it's shifted over to May. Next week, maybe it shifts back to March. But if it doesn't occur until May, then I think dominance will just keep on grinding higher. Yes, it could go slightly lower in the meantime, but I still think it'll go up. So yes, people can laugh all they want about the Bitcoin dominance view. They control these hour-long Bitcoin dominance videos. But at the end of the day, you look at this chart, and it has just been going up for a long time, right? So going back to Bitcoin in terms of, so you're saying it can go up or down. The point is, I can't predict the market in terms of where it's going to go. I can't. I have no problem saying that. If, I think think about all the hedge funds there are, right? All these hedge funds where you have so many smart people simply trying to outperform the S&P 500. And like almost none of them can, right? Almost none of them can. If you think about it, all these hedge funds, right, they have like, they hire these quant PhDs from, from the best institutions. And if all of these people in a room can't outperform the S&P, then why do I think I can, right? I don't. And so I can't predict where the market's going to go. I think it's okay for people to say that. I don't really get why that's such a controversial view to have. I cannot predict where the market's going to go next week, next month. I don't know. We put out predictions. Some of them turn true. Some of them don't. This one looks like it's okay. This one was wrong. I mean, we're fourth halving. We're between 40 to 50K potentially, but the peak occurred at a different time. So when I look at charts like this for Bitcoin, and I think, well, where is it most likely going to go in the short term? I think there's a case to be made that it'll visit the bull market support band. I think it could go down to the 100 week, and if we get a hard landing, it could go a lot lower than that. But I'm not betting everything I have on that, right? DCA strategy is probably going to be it's the best strategy, I think, over a longer time period, right? Rather than trying to time the bottom. Because even in the event that we come back down and do get that scare, it could be like that, where literally no one buys it. And everyone, and you buy some, but a lot of people think it's going to go lower. So those are my views. Going back to the halving year stuff. If you look at 2012, 2016, 2020, 2024, it's pretty normal to have a dip around this time. And it's also pretty normal for that dip to last and not durably get back above the yearly open until, April or something. And there's still no guarantee that we can't go back down and get a scare even after that. It really just depends on how the macro unfolds. But I do want people to have a plan going into this stuff. Remember, it's the risk that you take, right? You have to figure out what risk you want to take on, what you don't, how to be hedged for various potential outcomes, and just take it from there. So those are my views on the market. I just want to provide an update on where we are in the halving year right now. I still do think Ether, Bitcoin will eventually break down, but it certainly could still be a couple of months away. I'm thinking the first half of the year is my best guess. Sometime in H1 of the halving year is when Ether, Bitcoin will break down finally. And after it breaks down, I think that will within a couple of months, I think that'll mark the low on Ether, Bitcoin. But I don't think we're there yet, but I do think we will get there. So if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.